Welcome to Trading Lounge and the US Indices for the 8th of February and study on the 1 hour chart here. So from our little wave 4 here, we were counting 5 waves up in terms of 1 and 2. Doesn't look very nice here, but on the cash market it counted nicely as 5 waves. And then 5 waves up here for wave 3 and a complicated wave 4 and then up for wave 5. I think wave 5 is on that little high just in here, and I've taken this particular count here down here off the cash market as well, with the third wave being here and the fourth wave being here. One more down for the fifth wave here. If you're short already, well then that's fine, but otherwise we can look at, once this wave 5 comes in here within group 2 here, then we can expect an A and a B and a C to come back, and then another move down. So taking that low and that second low here as your trigger over here would put you in the right place over here. Of course, you can also short it on the ABC, looking back up for the 61.8% retracement level roughly. It looks a bit like this on the tick chart. This is 100 ticks here, so that's why I was looking, because we were expecting we had this as the third wave and the fourth wave here, and I can see 1, 2, 3, 4, 5 here for this particular structure here, finishing it off here. And I know wave 1 down here doesn't look that fantastic, and in fact if I had to do this I would place this over here and look at this as 1, an A and a B and a C for wave 2, and then the same instance here too, actually, with wave 1, A and a B and a C for wave 2, down for wave 3, 4 and 5 here, and the wave 4 will be roughly where wave 3 is here. Let me just double check that here. So 38.2% retracement levels about here. Not that it has to come here, it's working with the 2700 area here. So in a nutshell, you know, we have to be mindful that you know, we are in a bullish trend to the upside. We are working with the 61.8% retracement level, which is roughly the 2700 area through here. We had an upside target of 2720 here, so we're reasonably sort of close with everything, but we're still vibrating at that 2700, which is the 61.8% retracement level. And with that in mind, you know, we look at this level here, the 2700, and then group 1 above, which is 10, 20 and 30, and then we look to group 2 below, which is 80, 72 and 65. That's the range where the correction can happen at this level here. If we'd gotten support here, which means that we had the first high above the level here, or this one, and then it's retesting here, so then we would have taken this as a long trade here, or taking this as a long trade, or this as a long trade, or this one, or this, any of these highs here, if the market had moved back up through here. But we've been stopped out here anyway, so yeah, so look, just to point out that the number 3 here, if we get support on that, then we can look at the next level, which is the midpoint, the 50 here. But it started to show support, but it never gave us a trigger to enter a new high here. And so this here, this 38.2% retracement level, it may not come back to where this space is here because of the 2700 being a large number and can skew things somewhat. But look, if we do get this move down through here, then we have 5 waves down here, and then we can look for this A, B and C pattern to come into play here, and this is the one that we can short through here. So just push that to the side. So that's sort of where we are. We've had a nice little trade to the upside in a few of the indices in this nature. I've put this green trigger here because if we've only got 3 waves down, well then we're going to be pushing higher from that point, so we can go long above this one here. But otherwise we'll wait for the 5 waves to unfold here, an ABC pattern here, and then we can move off from that space. I'll just put these in over here. You'll need to adjust this, of course. This low and this low here can be completely different. So let's just drill out and have a look at a few things in the bigger picture now. So if we go to the 4-hour chart, our main gig here was that we'd been from the Christmas low here, we'd been counting upwards, and we're counting 5 waves up, and we've got those 5 waves there. So realistically, the next thing to look for in terms of Elliott Wave theory is the 50-60% retracement level here, which will bring us back into what I call the medium level here, the 2,500. Not that it needs to come back this low, but this is our first, we need to put that on the map basically, and there's still a lot of work to do. I mean, basically we're in an uptrend here, as you can see, so saying that's the top there without any evidence is a bit flimsy. So we do need to see that first 5 wave structure down through here, and then once we get that, we'll have our little ABC, and we'll push down further from here as well. So yeah, we know where the short trade is, we know where the long trade is here, we know the count, so we just need to see if this count falls into place. But coming back to the 2,500 area here is what we're looking at, and because we have 5 waves up here, then we're looking for this move up here, and then to come back into, I'll move this here, put this in here, probably have to move this along a little bit the time that all gets to there, but be something like this here. Yeah, so once we've got this in play here, then we can move up from this point. So it's kind of nice to have the 50-60% retracement level on this particular the closest largest number here, because if this becomes the resistance, if the market ends up down here, well then we're going to have a bearish picture within all of this here. So in that case, then we'd need to look at the bearish side of the market. The only bearish picture I've really got for all of this here at the moment, in terms of a real bear market, is a pattern that we looked at a long time ago, and it was a little bit flimsy, but it kind of worked okay really. So from this high here on the SP 500, this was the high. On the SP 1000, this was the high here. So this has always sort of bothered me a little bit, because I know that even from this one here, we can count this down as 1 and 2 here, and 3 here, and 4 here, and 5 here for the third wave. So we could look at this as 1 and 2 here. Like I said, it's a bit flimsy, but it's there, and 3 here, an A and a B and a C for wave 4. Wave 4 was rather big, but that's what wave 4 does. But it only pulled back to the wave 4 of 1 lesser degree here as well, even though it was higher than the 38.2%. It was more like 50%. And then from here we can count 5 waves down here. So it's possible to have wave 1 here and look at this here as an A and a B, and then 1 and 2 and 3 and 4 and 5 here for the C wave. So it is possible for this. So I am mindful of this scenario, but pulling this apart here, it does appear that we've got 5 waves within this particular structure here. Yeah, so, but we've had, the Alphabet and Amazon, they've pulled back up into this particular space, into their 61.8% retracement levels as well. So let's just have a look at Amazon, because we've been focused on that. So with Amazon here, we've also counted this down as a corrective wave, but the move up through here appears to be in 5 waves up here, and it's pulled back up into its 61.8% mark here. And once again too, it's this is its 50-60% retracement level here at 1500. So if this becomes the resistance, well then we'll also look at this in a bearish pattern as well. But until that occurs, we've counted this up here in that 5 wave structure. Just putting it on the hourly chart now. This is Amazon on a 1 hour chart. So from this wave 4 here, we've counted 1 and 2 and 1 and 2 and 3 and 4 and 5 for the third, ABC for the fourth, and up for the fifth here. And then, as you know, we've just been looking for, I can clean this up a bit here now, but in a nutshell, we're looking for that ABC pattern to come back into play here. So it's basically doing that. But we do need it to stop at these within this space here. Sorry for doing all the housework while I'm talking to you, but yeah, so it can move back into this space here. Let's just see how we go with this. This long trade trigger we've had here, that can be moved down on top of this one here now. Okay, so if that's triggered on the long side, then we're going to capture that trade to the long side. In terms of trading short here, I've missed it a little bit. What we should have been looking at here would be, it's the same concept. If you know the levels, it would be under this low here because the market's moved down. We've had a little ABC here. So we could have drawn a line on angle through there. We could take the lower, but basically it's retested and failed the retest and down. So the short trade would be at this point. But I didn't mention that, but if you know the levels and you focus on this market, then you know what to do at that point. So within this here, we need to be a little bit careful. I can see we've got 1 and 2 and 3 and 4 here and 5 here. So that could be the end of the A, B, and C here at this point. So we'll need to see if this comes down in 5 waves, comes back in 3, and then gives us another 5 down like this, and then like this, and so on into this point here. But I won't turn into a whole bearish market unless we've got this number here at the resistance level here with these markets, and also the Nasdaq as well with this. So oops a daisy, that's something else, so not to worry about that. Tech stock here. So once again here as well, we'd been looking at wave 4 here, and wave 1 and 2 and 3 and 4 and 1 and 2 and 3 and 4 and 5 up here for this. So we've been stopped out here now. Haven't gone short against the main trend, but we can look at that. This would be the same here as well. This would be a little 4th wave pulling back into here and a 5th wave here. Once that comes into play, we'll see an A and a B and a C wave here. And then we can look to short through here. Because we've got 5 waves here, we'll have a safer trade on this side over here for this market. So yeah, okay, well, look, that's it in a nutshell. Let's see how we go. Enjoy the weekend. Cheers.